So many investors are asking us, how is it possible to earn more than 10% interest by investing in real estate-backed loans while banks are lending money for much lower rates? Well, that's a very important question which we'll be talking about with today's guest, Daniil, who is the head of group sales at EstateGuru. Hi Daniil, and thanks for joining me today on such a short notice.
Hi. Thanks for inviting, and sure, would love to give you some kind of feedback and insights about how the whole business is working and why actually we have such many developers and businesses who are actually willing to take loans for more than 10% interest, as you mentioned. So, shortly. About myself, perhaps I was invited to EstateGuru in the really early, basically beginning of our company. So it was more than 5 years ago. Back then we had our CEO Marek. We had IT person who basically built the whole platform, and then the partners as well. So I was basically the first official employee, and then we had, I think, a couple of projects financed, and the whole volume was around, I think, 2 million or a bit less even, what we totally funded, and 1,000 investors perhaps. So I came straight from university, and I was like 360 degrees employee doing basically everything, from marketing, from investor relations, customer support, sales, and basically design even, and so on. So and from there it grew basically to current position of head of group sales. The sales we mean in EstateGuru is basically the loan origination part. And yeah, I'm leading today the whole activities of the origination part, teams of local teams in our different countries we operate, and making sure that all the sales and pipelines are full with good projects, and taking care of everything what is from the administrative part as well, and how the platform performs in terms of uploading the project, keeping the quality, simplifying the processes, automating everything as much as possible, and so on.
Well, that sounds like a really exciting career path of yours.
Yeah, definitely. It was. It came out of the blue. Basically, the offer to join here. I didn't know anything about real estate back then, but I think it's been a really fun and interesting journey, definitely, over those 5 years.
All right. So, well, can you briefly explain maybe what is like your average borrower that EstateGuru is lending money to?
Yeah, sure. Well, in majority of the cases, like I think it's around 70% is the company that is mainly engaged in different real estate activities, such as development, purchase, resale, some kind of buy-to-let activities, like renting an apartment for long-term, or Airbnbs, flipping, and so on. 30% of the companies are doing different business activities. It could be from, I don't know, let's say, dealing with some machinery, production, and until like even, I don't know, purchasing something and reselling. So different scope, but 70% is mainly with real estate activities engaged with. So and as to mention, we don't lend to the private persons, so we only lend out to the companies.
Mm-hmm. If we would dive a little bit deeper in terms of loan types, would you say that most borrowers are financing development loans, or are those bridge loans? What would you comment on that?
So there is, as I said, the scope is quite large. Of course, many do development projects from the scratch. They actually build from the raw land plot, actual building, and sell it, or just start renting it out and refinance with the bank later on. Can keep property into their portfolios. Some of them are just engaged in like increasing the value of the property, so they are buying a raw land and then building the infrastructure, roads, network, utilities, and then they're just selling the land plots to the developers who or actually home buyers who build their own house there or develop actually some kind of bigger apartment house or like terrace house and so on. There is in different types of scenarios, there's also a bridge financing involved also. So basically they're just releasing the equity for some period of time until they have secured the long-term financing with a traditional bank, for example. So let's say there is a development project to begin with, let's say 40 units apartment house, and the developer is just he has the land plot, he has purchased it, and he needs to do the planning, the design, prepare the land for actual development, start to do pre-sales and so on, and so he needs capital for that period of time. And then when he has, let's say 40% pre-sales done, he has started with the construction, he has all the permissions, construction permits and everything in place, then let's say a traditional bank comes in and starts financing the whole development, and then the money is returned back. So this is basically a bridge finance. But there is also different cases where our borrowers are basically just having completed some kind of project or have different kind of real estate to offer, and they basically use the capital to start a new project, or they actually are using the capital to purchase some land plot or building and resell it later with a profit. So, but using additional collateral for that.
So now most of the investors or most of the people that are interested in investing on EstateGuru, they have one very important objection, and that is, why is someone lending money for 10 or 11 or 12% interest per year while the banks lend for almost nothing, and when it's especially backed by a first-rank mortgage? Can you explain why borrowers go to EstateGuru and not primarily to the bank?
There are, I guess, many different reasons for that. But let's begin with a couple of the basics ones. So in the Baltic states, especially also Estonia and Latvia, and also Lithuania, let's say there's hard money lenders who did this lending on like let's say offline way, that somebody comes and wants a mortgage-backed loan. So the interest rates also start from 10 and they go up to 20 sometimes. The banks, if you are like a top tier developer, maybe top 10 developer in each of the country, then you have the access for the bank capital, I guess, with the interest rate around perhaps 4, 5, 6%, depending on the bank. If you have the market leader bank, then perhaps you can get loan with 4 maybe 3.5 or something like this. This is the purely interest rate, but there are many different additional fees involved in the traditional banking. So there is ongoing credit line fee. There is also this kind of this loan agreement fees, early repayment fees. There's many different checkpoints that the borrower needs to fulfill. So the total cost, actually taking from the traditional bank, it's not actual this nothing. So there is many costs involved, and there are many small details. For example, if you take from the traditional bank and you build a development project of, let's say, also 40 units, and you want to start, if you start selling the property, the units, then you need to repay the bank loan back. So you have 40 units, you start having notaries, you start giving ownerships their apartments. So usually bank demands 100% of the sale transaction price to be paid back in the first as a first step to the bank. So you have built it, and then you start selling, but perhaps you haven't finished fully the project, and you actually want to use this capital from repaid apartments to actually invest it further to the development. So we have really flexible repayment like return rates. So when the apartment is being sold, so there is a return rate. So it's not the full sale transaction price that goes back to the EstateGuru investors, but it goes with a multiple of 1.2 from the principal amount. So basically, the developer keeps some percentage. It's usually like the same as LTV. So he keeps, let's say, 30% from the sale price for himself. He can invest it further to finish the development, and this extra capital is very important for the borrowers for such kind of cases. Then in the traditional banking sector, according to different Basel and PSD2 requirements, the banks are not really willing to lend to SMEs. There is a huge gap of SMEs being underfinanced in the whole Europe as well, also in the Baltics. So basically, the SMEs have less options getting the traditional bank loan because and it takes much slower time to get the decision, and the banks are basically cherry picking the good projects or bad projects. So in that sense, what we offer is really fast and flexible loans with, yes, a little bit higher interest rate, but we have understood making different calculations and providing those calculations to our borrowers. They actually see this financial cost is really marginal part of the whole development. So even if you go to one of the biggest banks here in Estonia or Latvia, Lithuania, let's say, then the total cost of the traditional banking loan could be, let's say, somewhere even between 6 to 7 in total when you actually have to pay back the loan. Let's take EstateGuru example, it's 12%. But let's say it's really marginal, this financial cost of interest, if you compare it to that you can basically maybe bargain down the price of the land plot. You can bargain down some kind of design costs. You can choose a less expensive company who is doing all this designs and project and so on. In the banks, they have a panel of the construction companies that they accept only some big names who usually have much higher construction cost calculation and so on. We don't demand such things, so you can save on different many other parts where this it basically is your total expenses for the whole project will be maybe even less if you take a loan with a higher interest rate from EstateGuru rather than you follow the procedures of the bank. So the same, let's say, a comparison, if you have the banks demand that you have at least 30 to 40% pre-sales done before actually bank is willing to take your application in. So imagine how much marketing cost you have to do in order to get those 30-40% pre-sales. If you have nothing, you just have basically a nice fancy pictures, a land plot, and that's it. So many buyers actually want to see already that the construction has been started and so on. So the marketing cost that goes there, and then if you compare it to that, you can actually start building already with the land plot. You can already have nice banners at the site, and you don't have to spend maybe that much of the marketing cost because the clients who are living nearby, they want to purchase a new apartment, let's say, in that area, so they come to the developer themselves. So there are many things where this financial cost is just one small part of the whole project and the whole big picture, which compensate this higher interest rate.
Yeah, thanks for this very extensive answer. I think we will dissect it a little bit. So you mentioned that speed of funding is a big plus for the borrower. So how long does it take to from the beginning until you close the deal with the borrower on EstateGuru versus in comparison to the banks?
It usually could take up to 1-2 months if you want to get the traditional bank loan. Here in the countries we mainly currently operate in the Baltics. I have heard that in Germany it could take even up to 6 months to basically secure a bank loan. What I actually took a statistics yesterday out that starting from 2015 up to now, the average sales cycle of like successful deal we have financed on the EstateGuru has taken around 26 days. But this is from 2015 when basically we had to gather maybe one month the whole loan and so on. But in 2020 the average sales cycle has been 12 days. So this of course counts everything that the deals that are coming in without the maybe collateral reports and then they need to order evaluation and so on. But in like really reality and really good cases, it could take up to like 3 days. And for like recurring customer who know how the whole platform works, they have evaluation report. For example, on Monday they send us the evaluation report. We do in 24 hours the due diligence, ask additional questions. If everything is straightforward, we offer the terms the next day. On Tuesday, if the borrower agrees, on Tuesday afternoon the project is live, and if it's financed fully, then basically we can go on Wednesday to notary and the client has the money. So and if it's a new customer who has never taken EstateGuru loans, and there might be maybe some kind of additional questions we need to ask from him, then it's like around 7 to 10 days. In reality, it could take actually to get money on your account already.
Mm-hmm. Well, that's very fast. On EstateGuru, we can obviously see loan availability of projects that investors can invest in is quite volatile. From let's say 100 applicants, how many make it to the platform?
Yeah, so there is one fundamental kind of strategy that we have implemented from really early beginning, from when basically I joined, is that we have built like an outbound sales teams. So we are not really depending on everything that is coming like loan requests from different borrowers that have found us through the internet or advertising, because we have really small advertising budget in that sense. So around, I think today 95% of the projects we have actually financed have been found by our sales teams in all the countries we operate. So we basically the loan managers and the sales team we have built in every country, they're already like a small micro like risk managers. So they are choosing which projects they are approaching and whom they are calling. So this already is making a total difference in the statistics which you asked. So basically from this 5% what we have financed from the guys, let's say, who have seen our advertising or just are sending us a loan request, only 4 deals ending the platform out of 100. I checked actually also yesterday the statistics what we have. But if we remove those all loan requests that are basically coming from the street, then it's around 40% that like 40 deals out of 100 reach the platform. It's out of the ones the loan managers are finding themselves. So the whole how it basically works is that we have built different lead origination channels. Everything is very automated. How we find the different deals, we have everything: construction permit databases, planning databases, all this real estate listing portals, their whole automated process where basically we get feeded in deals on a daily basis, and then our loan managers are making a filter out of that and then contacting if they see that there is a potential deal already in that kind of lead. So in that sense, it's already making this quality much higher, that we don't accept everything what is available in the market.
I think this is very important information for the investors, because obviously we want to make money, we want to make interest, and EstateGuru has been growing a lot in the last year. So of course you guys need also to come up always with new projects so investors can continue investing. So it's good that you guys have some kind of a filter that continuously reduces the risks for the investors, and additionally to that you have the in 95% of the loans, I believe, you have the first rank mortgage, which adds another layer of security, right?
Exactly.
All right. So you also mentioned that the marginal cost of this financing through EstateGuru is actually not a big deal for the borrowers. I would be interested in how much of the fee that the borrower is paying to EstateGuru, not the interest now, but the let's say the commission for you guys.
Yeah, so it's usually around flat 3% from the whole total loan amount, and then we sometimes practice also administration fee, like ongoing administration fee between 0 to 1% per year. So, but it all depends on different cases, the loan amount in total. So we can go either higher or lower in that sense. So there is a difference if somebody is asking, let's say, a 40,000 loan, and the work amount we do is basically the same for the case where we finance, let's say, 3 million in total. So I guess you get the point here that we can go either a bit higher or a bit lower in that sense. So.
So I think that's also one of the reasons maybe why you get repeat borrowers, right? In the last report from 2019, I read that 50% of the borrowers come back to EstateGuru to finance other projects, correct?
Yes, it's actually now I think more than I also checked for this interview yesterday the whole pipeline statistics what we have. So I think around 100 million out of total like 250 million we have done has been done purely from the recurring customers, following that they have taken once before a loan. So it basically is like something. The statistics is that more than every second customer returns to us, and he takes on average 3 loans in 5 years time in total. So this is something we are really proud of, because it shows that whenever the customer has had a positive experience and the beauty of the platform, getting financing really fast and has really flawless process during the whole period of the project, then he is definitely willing to come back and ask for additional loans. And we really do have many such clients who, for example, let's say started a company before, were young players, took first loans through EstateGuru platform, for example. Now they have grown bigger, and the banks are actually knocking on their doors that we are willing to offer you a really like much lower interest rate and so on. But they still just basically don't want to go there, because they know how much pain in the ass it basically will be, the whole process of taking a bank loan instead of taking it with EstateGuru, if they know the whole process already. So they just send us the materials, they know how it's the approval process, they know it will be really fastly funded, they know that investors know about their projects, that they have paid back the money and so on. and they are really confident that it's much simpler to just pay a little bit higher but get much better quality out of that.
Okay, now I'm really curious about the countries where EstateGuru has expanded in the last few months. We've talked mostly now about the Baltic countries and the interest ranges in the Baltics. But EstateGuru is also active in Portugal, Spain, Germany, and the latest country was, I believe, Finland. I'm really curious, especially about the Germany situation. I know that in Germany, many investors have basically this repeating question: how is it possible to get to finance a loan that's mortgage backed with 10 or more percent? And in Germany, the interest rates are really low in comparison, maybe to the Baltics. So can you maybe comment on how is the sales process going in Germany, and how you are able to secure deals with such a high interest for the investors?
Yeah, sure. So in Spain and Portugal, we have done a couple of deals. Yes, we don't have a local office there yet established, but perhaps it will be in 2021 when we will launch activities there more actively. But the main markets currently on the table are, of course, yes, Finland and Germany. In Finland, we actually did the first loans already a couple of years ago, if I'm correct, and we got our first country manager hired last year. But as of last week, we received this crowdfunding license in Finland. So now we are officially launched there. So we had like a soft launch before, but in Finland as well. So there is traditionally the development finance basically has a really strong connection to the banking sector indeed. So basically like even around 80% is financed through the banks and 20% is financed through the private market. But this is also slowly changing because of the regulations and so on. So the clients, the companies and borrowers, SMEs are becoming more willing to take loans even for 10% rate. It's simply because the banks are not even looking at their applications and so on. And taking this question about the Germany, yes, we agree that the banks are offering much lower interest rate there. But when we visited last year Expo Real in conference, I think in Munich, right? It takes place. Then we had a stand there, and during 2 days we got around perhaps like more than 50 different developers coming to us and coming to our stand, and also asking exact precise questions. So like why should I take 10% interest rate from you? But when they started to dig into, they understood that okay, yes, they agree that it takes sometimes 3 to 6 months simply to secure a bank loan, and many of them said, I think more than half said that they get different good new kind of opportunities coming to them to their email boxes. Somebody's offering a new land plot to develop, somebody's offering old warehouse or old building to be refurbished and so on. And when they go with this kind of loan application to the bank and get, let's say, an answer in 3 months, then the property is already gone. So somebody bought it already. So they really need this liquidity to make the quick decision and purchase, for example. So the need of this bridge finance for a couple of months, even for 3 to maybe 4 months in total, it's all right to pay them around 0.8 or 1% per month. So the 10 to 12 is annual basis. But if you pay 1% interest rate per month, basically, it's all right for their like Excel to carry on with this project and later on refinance it with the bank. So the bridge financing sector across the whole Europe, the interest rates are around 10%. So we believe still that we have a market there. We don't expect that we will be, of course,
competing directly with the banks, and maybe in Germany, indeed, the interest rate is maybe 1% even, yeah. But it's we are in this niche market where we can really quickly provide the financing and give the borrowers opportunity to actually move on with this project and then refinance with the bank as well. And I guess another part of this is that I guess you are familiar with this, one of the biggest German platform, Exporo, right? So if you look at the Exporo, then the interest rate there are around 5%, 5.5%, and there is not first rank mortgage, but there is like mezzanine or equity deals, which are like tremendously more riskier, but the investors still like it. So investors still approve project with 5% for mezzanine finance or just equity without any collateral. So we see that this is the trend. Of course, we try to, unfortunately for the investors, we try to lower the interest rate over long term. So we see now already that we can offer investors around 7 to 8% very liquid, ready assets in central areas of the countries we currently operate, and investors still enjoy such kind of projects even with the lower interest rate. And by lowering the interest rate, it will give us again competitive advantage in the new markets we expand, and the same, it will create totally different class of the borrowers and the projects we can provide to the investors. So by lowering the interest rates, we can go to like top 10 developers in the Baltics, for example, who will be also eager to take the loans here.
All right. So let's maybe close off this discussion with the last question. And that is that a lot of investors believe that in Europe we have a real estate bubble that's about to burst in the short future. And they are not keen in investing in real estate backed loans, which have been evaluated at this point. They believe that the value of the real estate properties will decrease significantly, which will potentially put their money at risk. So can you comment on this trend? What is your opinion about it, and how do you see it developing in the next few months?
Well, there is the bubble in the real estate has been talked about, I guess, before the COVID situation, and for many years before as well. We see still that even with the COVID situation, of course, there started to be quite much of the different uncertainty with what will happen and so on. But visiting quite many different real estate conferences during the last couple of months that are being held here as well, we have understood that it's the shock has gone through now. Situation is more or less stabilizing. The Baltic states have suffered much less than the other bigger European markets, such as like Southern European markets in terms of GDP growth. So it means that definitely in the Baltic states, we don't see that there should be something happening with the real estate prices in the upcoming months or years. What we see that the prices will not decrease, but the price growth will decrease. So the price growth has been quite large during the last years. What will just basically happen is this: it will like a little bit stabilize, but definitely we don't see any kind of drop in real estate prices, at least in the markets we currently operate. And to have them just basically secure the investors, we have this LTV of maximum 75%, and we have become a little bit more conservative in there as well. So we have lowered a little bit our LTV. So for development projects, we usually don't want to go over maybe 50-55% in the first stages and so on. So this will generate additional buffer if some kind of price correction should happen on the market. but we are still confident that the prices here, at least in the Baltics, are definitely going to at some point start to increase again. It's just the basics of that, the quality of life has been increased, this average salaries have been increased, the price of actually doing the construction and all this construction cost, material costs are increasing. It's not possible to build different development, new development project with and selling it with the less with significant discounts. So it's I guess in the definitely upcoming months we don't see a drop, and for the next year we see that the stability transaction prices will stabilize on the level of 2019, and the prices will slowly still start to increase. So
yeah, thanks for the insight. I think investors, there is still a lot of different deals on EstateGuru. Investors can cherry pick their own investments and also look at the LTV, look at the securities, whether the borrower has borrowed money from EstateGuru before, which also adds on a bit more trust, right? So there is a lot of options to mitigate this risk, and maybe also invest in the Baltics, in central regions where the price drop is rather unexpected. So yeah, a lot of options to choose from actually.
Exactly. So that's what we want to. That's our aim as well. That we want to give the opportunity to the investor that they can invest in the future in perhaps all European countries and different real estate, diversify their portfolios. And if, let's say, something happens in Italian market or Spanish market, then they have their eggs in different baskets, right? So that's the diversification beauty of the platform as well, that you don't have to put your exposure to one single market, but instead you can spread it out in different projects across different countries. So and today we are already in seven countries, and I think we are the only platform that allows you to invest in 7 different jurisdictions and in different property-backed loans across 7 countries. So we aim to expand to different new markets as well in the upcoming future. So I hope the investors will like it as well. So.
Yeah, absolutely. Daniil, thanks a lot for joining me for this interview today. I really enjoyed it. I think there's a lot of valuable insights that you have provided. And let's have a talk in the future again.
Sure, thank you as well. I hope I have clarified a couple of the concerns the investors perhaps had, and gave a little bit of insights of how the borrower is thinking, and why actually this 10% is not something that is like utopic for the clients we have. So if everything makes sense, and if you have any kind of questions further on, then please let me know. Happy to help and talk as well.